Hello, everyone. Welcome to Just Invest Today. And today we're going to be talking about the meaning of a business. Yes, the meaning of a business. And this is going to be a four-part series. We're going to be talking about the meaning, moat, management, and margin of safety. But just today, we're just going to be talking about the meaning of a business and how this is very important for your investment success and actually how to pick a good company that you understand and that you're knowledgeable about so you make good returns in the stock market. So the first question we want to ask yourself is, does this business have a meaning to you? And this question is a very demanding question that actually makes you think about the business and if you're comfortable with its values and what it does. And so we got to think of this business like it's like a private business that we're going to hold forever. And that's the way you want to put your mindset, because when the business goes through its ups and downs, because all businesses go through its ups and downs, you really want to be comfortable still owning it and not panicking when the stock or the business goes up and down in value or its worth. So you got to be comfortable in understanding the business and being very good knowing what it's going to do in the future and how it's going to maneuver. When we buy the business, we're not buying the business as a speculation. We buying this business as we want to own the whole company, and we got to think of it that way. Because when you think of it that way, it kind of makes the business more personal to you, and that's a very key thing. Because when you're actually buying stocks and investments, you're putting your hard-earned money into it. So when you're putting your hard-earned money into a company, it's like a vote of confidence. If you don't like cigarettes and you buy a cigarette company, you're not going to be really motivated to understand the company, look into it, and get to know the company to see if it's actually a good future investment or a business. So you always want to make sure that you understand the company and you know the values of the company, and if you're comfortable with buying that company, because it's going to be a personal journey for you, and we got to think of it like we're owning the whole business as a private equity person. And all this is personal. Not everyone has to invest like that. Some people can invest in a cigarette company, and we know it provides bad health benefits and it does all this bad stuff for you, and they can still be proud of owning the company. So you gotta judge yourself on your morals and how you feel about the company. But either way is not wrong. It's just kind of building that awareness. So when you do invest in a company, you're gonna look forward to owning it and actually having it for like 10 plus years, because that's what we're kind of, that's our goal, to own it for a long time. And when you own it for a long time, it kind of reduces the risk of actually having a business in your portfolio. Before owning the company, we want to think about the 10-10 rule. So the 10-10 rule is basically, you don't want to own the stock for 10 minutes if you're not willing it to hold for 10 years. And this is actually a very good concept to hold in your head. It makes us a very long-term investor and more disciplined, because our objective is never to lose money with our stock picks. And when we think of it like this, we, like, again, we actually understand the company, we look into it, and we find its weaknesses, its competitive advantages. Our number one goal is not to lose money in the stock market. So this is actually a very key concept to have in your head, and use it, because it's going to be very advantageous for you in the future, and when you want to find a wonderful company. Because when we find those wonderful companies, it's going to be amazing for us, because we have the opportunity to wait patiently for these wonderful companies to buy at attractive prices. We are trying to buy simple and predictive businesses. And the question that always comes up is, how much do we have to understand about the business before we invest in it? And that's a good question, because some businesses are simple and predictive, and some businesses are actually very hard to understand. So that question is very good to ask yourselves, and we want to buy those simple businesses. So we just know that we just have to know anything about like how it sells its products, how does it make its money, how competitive is it, what exactly does it do, and how does it like look for its suppliers. And those are good questions to ask. And if we understand the businesses, we can ask those questions very easy. So that's what we're looking for in these businesses to invest in: simple and very predictive. Like, for an example, Foot Locker. Foot Locker is a very easy business to understand. It sells shoes, and majority of the shoes it sells is Nike. Like 70% of the business, it sells Nike products. So what else do we really need to know about the business? that it has a good relationship with Nike, and like what's its competitive advantage, like how it sells its products and basically what it does. So when we're looking for businesses, we want simple and predictive, not like some hard business that with a lot of moving parts in it. Like maybe like a company like Boeing might be very hard to understand because there's a lot of stuff going into that company, like defense and its airline business and how it sells airplanes. The last step of our business understanding and finding a business with meaning is finding the business that is very predictable. So we got to look at companies with a good history, past history of good net earnings and consistency, and that's what we're looking for when we're buying a company is very consistent stats like net income, return on equity, return on invested capital, low debt, and stuff like that. So we need that consistency before we invest into a company, and we gotta make sure we have a lot of patience to wait for that price to go down. And that's the last step in this process of finding a good company with a good meaning and good understanding. So thanks for watching this video. This video is the first part of a four-part series because today we just talked about the meaning and understanding of the business. And the next thing we're going to talk about is actually the moat of the business. And I'm going to go more into that in the next video. So if you like this video, please like it, subscribe to my channel, and wait for the next video. Thank you guys. Bye.